Hello, hello, hello. Welcome to another great episode of Travillian Next. Very, very happy to have this guest on the program for the second time. Joining us from Washington, D.C., Ian Moloney, Chief Policy Officer at the American Fintech Council. Thank you very much for joining us, Ian.
Hey, Keith. Thanks. Great to be back. Really looking forward to a fun conversation. It's very, very wonky, and I'm sure your
Yeah,
audience will.
yeah. You're the one I go to when I'm reading all these press releases and everything coming from the regulatory agencies and from Washington. I'm like, let's get Ian on the pod. But I was
Uh,
looking up the last time we had you on, first time, was right before the 2024 election, and so much was happening at that time. We're about almost 2 years in, I guess, 18 months into the new administration. Really wanted to have you on as we approach the midterms in a few months. But just wanted to get your opinions on what you've seen, what has happened, what's changed down there in Washington and with the regulatory agencies. What do you see? Do you feel that the regulatory agencies are becoming more coordinated with the new administration? What are some of the items that are really sticking out to you right now?
yeah, I think it's crazy that it has been since 2024 that I haven't been on since, but it's been a whirlwind. I mean, so much has been going on down in here in DC as well as out in the States. And I think throughout, this conversation, there's a lot of that discussion of what's happening in DC, but also what's happening in the States, because ultimately financial services fits squarely in that dual regulatory framework and really has, federalism as a key part. I would say, especially as it relates to your question around being more coordinated, how does this administration fit with the previous administration? It's not to say that the last administration was completely uncoordinated or there wasn't sort of any sort of opportunity for that coordination writ large, especially at the prudential regulators. But this administration has taken a very much so more decidedly centralized approach. And some of that I think is by design, and also some of that is really due to the personnel that are leading the agencies, particularly the prudential regulators of the Federal Reserve, the FDIC, and the OCC. Because I think for those folks, a lot of them worked together in the previous Trump administration in 2016 in different capacities, but certainly within the government. You think about Jonathan Gould, who's now currently the OCC comptroller. He was working under Brian Brooks and was an attorney for him there. Was chief counsel, and then you have Travis Hill, who was under Chairman McWilliams, and so you've got a lot of people who know each other, and I think ultimately, and this is something I'm sure your audience is very familiar with, people matter. And for in the policy realm, especially in DC, people are policy. And so you start to see how those folks, they know each other, they work together. They're really trying to be very coordinated in their efforts. And then, sprinkle on top of that, you've got Vice Chair for Supervision, Michelle Bowman, who has had quite a significant tenure at the Federal Reserve as a board governor and worked with the previously mentioned folks of Gould and Hill, but also, was before that was a state bank commissioner in Kansas and actually was, a vice president over at a bank in Kansas. And so that deep understanding and significant work around the financial services space as an operator, I think has really allowed them to work together very well and have a very, very coordinated approach. That doesn't mean they're always going to coordinate. That doesn't mean it's just going to be a completely, centralized, unified system. We're not, the UK or Singapore after all, but ultimately, I think directionally, there's a lot of engagement that has been across the board with the prudential regulators, for the benefit of a more centralized and coordinated approach.
That's great. I didn't know that they all kind of worked together in the previous administration. So that's great. They know each other, or there's familiarity between the organizations. Now, we work with a lot of traditional banks, sponsor banks across the country. When you see this leadership change at the top, does it affect the supervision on the ground with, bank exams? Are you noticing that or hearing from your members or from other people?
The conversation around how you have leadership that engages and how that engagement kind of trickles down is always an interesting one in my opinion. I mean, I'm a wonky guy, so maybe not everybody's going to find this super fun, but if you all go with me, I think we can have a good time. It really, it goes back to that principle of, people are policy, but also when you think about the leadership structure and not just the political leadership, which is very important, but also the career leadership. And we've seen in the press and a lot of attention given to the significant turnover that has existed in the career leadership kind of across the government. There's been a big shift. There's been a lot of reductions in force, but I think particularly related to, risk and supervision, examination teams, you're seeing a lot of the kind of 30-year veterans of the bank examination space. They have retired. And so, that's timely, I think, and kind of indicative directionally of where the current administration really wanted to see a number of opportunities, a number of changes, and also, there's some that's just coincidental. And so as you see those changes within the personnel, you're seeing that some of the institutional inertia that maybe was not as forward leaning on financial technology or innovation, that's starting to change. And then when you combine that with the political leadership that's at the top, so Comptroller Gould and Chairman Hill and Vice Chair for Supervision Bowman, all three of those have really been forward leaning, have been thoughtful about several different areas. One is making sure that bank managers are able to be just that, bank managers. They're able to manage their risk. They're able to assess what programs they need and kind of remove some of the softer requirements or supervisory expectations around that engagement. And so you've seen a move towards material financial risks as opposed to things like reputation risk that's been removed from examination handbooks, as well as the policies and practices of those agencies. And then also you see within speech as well as in the actual deeds of the regulators, you've seen a lot of focus on trying to encourage innovation, particularly at the community bank level, which fits really well with AFC's membership, since a lot of our banks are community banks that have partnered with fintech companies to do it, to do financial services responsibly. And so you're seeing some of those significant structural changes, as well as a lot of engagement kind of across the board with the messaging of we need to be more forward leaning. And I think while it takes time ultimately for the agencies, for the boots on the ground examiners to really adopt that, because there is that institutional inertia that still exists, it's moving in the right direction. And so we've heard that while it's certainly not perfect, there are a lot of examiners that are kind of taking a fresher approach or a different approach to those innovative banks, not necessarily saying that they're deregulating, but they're just looking at these relationships between banks and fintech companies a little bit differently. And I think if we can continue to push on that examiner education and understanding and really, work as industry as well as government together, you're going to see a lot of benefit.
No, it's great. It's good, maybe more leadership that, a fresh look at innovation and technology. I can tell, our clients can tell, this administration, the regulatory agencies are more open to innovation across the board than maybe the past administration. But as you know, we work with a lot of sponsor banks out there. Some are your members at the AFC. What have you noticed over the last 12 to 18 months that has changed? Maybe in the regulatory posture towards sponsor banks and fintech partners, and where do you see that going? As we head towards the midterms and the next 2 years of Trump 2.0.
A lot of it has really focused on kind of where we've been. It's been a lot of that focus on bank managers, being bank managers, a lot of focus on that material financial risk, and also, that forward leaning of how can we take this regulatory structure that we've understood and what can we do to modify it, to modernize it. And so I think there's been a lot of attempts, very, concerted and thoughtful attempts to modernize the banking regulatory structure, both within the regulatory agencies themselves, but also within the Congress. And so if you look at the work, for example, that Chairman Hill on the House Financial Services Committee is doing, he and his team, as well as the various subcommittee chairs, have really focused on what is the supervisory structure? How often are these examinations occurring? Is it something that makes sense, makes good pragmatic sense for the size, the asset size of the bank, the innovative nature of the bank? And then also, if you run into an issue with your supervisor, say you have an adverse action conducted against you, then there's there needs to be that sort of opportunity for an appeal. And so looking to what that structure looks like and needs to, how that needs to be done can be very helpful from a legislative standpoint. So that way you don't have that inability to create a significant reliance interest that can sometimes occur when you're just doing something from a regulatory standpoint, but then is doubled up by the activities of the regulator, particularly FDIC with their supervisory appeals activities, as well as OCC, and kind of modifying those supervisory appeals qualities. And so that, I think, is a lot of where we've been. It's a lot of forward leaning, thought provoking kind of re-engagement of the regulatory system. So I think it'll be a lot of what we've seen kind of continuing on into the next 12 to 24 months. More recently, and just within the last month, we've seen that the prudential regulators came together and said, we've got these, the CAMELS rating, and we need to rethink that. It's the first time in 30 years, since 1996, that we've actually seen the examiners come, or the regulators come together and say, we need to maybe modernize this, rethink this. And so those sorts of activities are very helpful for pushing regulated entities into, a thought-provoking exercise on the industry side. I know I'm engaging in that, and I know colleagues are as well. But also, it's about coming back to where's their actual risk, and where are we having processes that might be overly burdensome or just unnecessary box ticking exercises. And so I think that's really helpful for making a more efficient examination and making a more effective examination. There's other areas too where I think the regulators are really starting to take seriously around bank fintech partnerships as it relates to standard setting. That's been an important topic for us. I know we work with the Coalition for Financial Ecosystem Standards, and they've been putting out a lot of work on that front, on the third party risk management angle. And then also, on that front particularly, there's, I think, an opportunity and an appetite to further engage on third party risk management. We had some significant guidance a number of years ago. The industry has become familiar with that, has worked that into their risk management processes for bank fintech partnerships. But there's also an opportunity, I think, to go, build on that and build further. And then lastly, and I'm sure, we'll get into this a little bit more in the conversation, but there's a lot of focus on how do we in financial services work with AI, and what kind of use cases are there? What kind of risk management processes are there? And how do we as financial services industry participants ensure that we're not injecting undue risk into the equation, and also that we're evaluating some of the regulatory technology companies effective.
Yeah. Well, that's a perfect segue to, the next conversation. AI, what is this thing, man? It's never in the news. People are just going to hear about it on this podcast. How seriously do you think regulators are taking AI governance right now? Do you believe they are kind of fully invested in making sure that the system is sound, that the regulation exams, because it's such a new and it's changing so quickly?
Mhm.
From your viewpoint, kind of what are you seeing on that?
The conversation around AI is really interesting, even if there's not been a ton at the federal level that's been, statutory codification or, regulations being pushed forward. I think it's always important when you're thinking about AI, first off, even though we refer to it in kind of a monolithic framework, it's certainly not a monolithic tool.
Hmm.
There's machine learning, there's generative AI, there's agentic AI, which is,
Agentic. Yeah.
I know we're moving in that direction. And I think there's a lot of conversations that need to be had in that sense. But ultimately, a lot of our laws and regulations, especially at the federal level, were written very technology neutral. So, I mean, this is a conversation we've had for years around the usage of artificial intelligence within the lending space. That it doesn't matter if you're using machine learning, what you're doing, if you have adverse action notices, you need to make sure that the consumer understands why they received an adverse action. The fair lending laws all still apply regardless of technology that's used. Now, with that said, I think there's a lot of discussion and important discussion of what kind of supervisory expectations are there. And so that gets into, instead of the laws and regulations, that's the guidance. And so guidance always within an agency shows what the supervisory expectations are. And so regulated entities can really engage effectively once they have good guidance. And so, at least generally speaking. And so that's where I think conversations are being had with the regulators and internally within the regulators about what do they need to be doing? How do they need to be thinking about, model risk management? There were changes there more
Hmm.
recently to the regulators' view on model risk management, but also, fitting into the broader AI conversation, because this administration has their AI action plan, which they released in May of 2025. They've also more recently in March of this past year put out their legislative frameworks, which had a significant focus on preemption. And that actually is very important because at the state level, we're seeing a lot of very fast moving state legislators and legislatures that are really pushing kind of in response to all the news attention.
Hmm.
It's that quiet topic of AI just popping up everywhere
Yeah.
across the spectrum. And so, we saw a couple of years ago, Colorado passed an AI bill that was very overly expansive and created a number of concerns, not only for the industry, but even for those folks that were in the government that signed the law into effect. And so they subsequently, in May of this last year, put forward and moved very quickly a new bill that's now, a much better bill. But there's a lot of conversations, I think, happening at the federal level around what are we seeing at the state level as it relates to AI more broadly. How does this impact financial services, and what's the role of preemption? What's the role of the federal government, and how can they operate effectively without kind of stymieing innovation within the space? And so
Yeah.
those are a lot of the higher level conversations. And then there's also specific conversations around, examinations and using AI tools within that context, which I think is a really cool avenue.
Yeah. And do you think they can keep up? I mean, it's just by the time, you write a regulation or update an exam, I mean, the technology could change, morph into something else. So who knows where it's going to go? But I'm just wondering, do they need to start adopting AI internally at these agencies to keep up with the banks that they're overseeing?
Yeah. I think it's always important to, when I think of examiners, they have a very important job. They should always have that professional skepticism, engaging with industry in a way that's not, overly collaborative, but not overly adversarial. And you kind of want your examiners to be one or two steps behind the latest kind of cutting edge. And that's by design. It's not necessarily a bug, it's a feature. But we don't want them to be 6 or 7 steps behind. And so that's where I think there's opportunities kind of twofold. One is for additional kind of examination, examiner education, from industry in, coordination and collaboration with both federal and state regulators, because you can't forget about the state regulators. They hold a very important role as well on, what are the tools that are being used? How are these being used? What can they do as far as impacting the risk of a regulated entity, and also, what can be done on the other side of leveraging, regulatory technology tools to actually make examination processes more effective, more efficient, but then also on the regulated entity, making sure that their outcomes are actually more efficient and more effective. I mean, you look at, for example, fraud risk. I mean, fraud is constantly changing. There's synthetic fraud, there's new, cutting edge fraud technologies that are coming to the fore, new scams every day. And a lot of that is because the illicit actors are leveraging the exact same
Oh yeah.
tools, or technology that the good actors are trying to
They're always a
leverage.
few steps ahead. They're
There's the
always.
and
Yeah.
it's a game of cat and
It
mouse, and
is.
so ultimately, that's where I think there's a good opportunity for the examiners to come in, make sure that they understand the products and services, the tools that are being used, and ultimately, I mean, on a compliance front, and I'm sure your listeners know this better than anyone, their AI should never be seen as a substitute. It should be seen as a complement to the processes, to the work that's already being done on the compliance side, on the risk management side, and on the products and services side. It's meant to ensure, from a fraud standpoint, particularly, that the patterns that exist and the anomalies, more importantly, that can exist within fraud detection, that those are caught more rapidly and able to be actioned in a very quick manner in a way that people are just not as good at. Just
Yeah.
factually speaking, we're not as good at recognizing patterns as an AI tool
Yeah.
is. And so I think that's something where there's a lot of opportunity on both sides of the equation, whether it be on the examiner or on the examined entity side, of making sure that they're working together to figure out what's going to create the best outcomes for the financial services industry.
Yeah, it's every day you're seeing a new release, or just think where we were the last time we spoke with AI and just how much has happened over the last 2 years. But yeah, the bad actors, cybersecurity, fraud, I like how you said synthetic fraud. I don't even want to ask what that is right now. That could be another episode where we
It's
talk
its
about
own
that.
topic in and of itself.
Yeah, that's a whole TED talk right there, right? But no, yeah, last thing, Ian, before we go, got the midterms coming up, heading into summer right now. Seems to be on, we're having a little lull in the summer, but you can tell out there it's starting to pick up. What are your thoughts there? And will that affect the agencies at all, the regulatory agencies? It's not going to be a new executive branch, could flip houses, new Senate, maybe at the state level too. What are your thoughts kind of on the midterms coming up, 2026?
I mean, simply put, elections always have consequences.
Yep.
What those consequences are, not perfectly clear. Obviously, my crystal ball is always a little bit cloudy as it relates to the politics of the day. But ultimately, there's an opportunity, I think, on both sides to kind of think about, what are the issues present, and how are consumers being impacted by, specifically in the financial services space, how are they being served, by bank fintech partnerships. I would be crazy to say that, bank fintech partnerships and fintech is the number one thing on everybody's list for when they're seeking reelection or seeking to be elected in the first place. But we've seen a lot more focus than we have in previous election cycles and in previous regulatory conversations. Even going back as far as 5 years, I think we're at a fundamentally different place as it relates to financial technology and understanding that kind of writ large. And so ultimately, there's definitely folks that have engaged in financial services conversations and in fintech conversations, thinking about like Andy Barr, he's a representative out of Kentucky right now. He's seeking a Senate bid and he's trying to join the Senate ranks. And I think there you've got someone who is very adept at financial services, understands banking, but understands like the modern qualities of banking. And so that's playing a role with regards to the administration. And if you see a split Congress, that will likely impact some of the work that's being done more at a high level. But ultimately, the administration, and I think particularly the prudential regulators, will continue to do their work, and they'll continue to operate. And there's always going to be questions about how much oversight is given and what kind of oversight is given, since that is the role of Congress upon the regulators. And that can shift, that can change depending on if you've got an opposition party in power, within one of the houses or within both houses. And ultimately, it changes the tenor and tone, but the work will likely continue on. The one thing I'll say is that there's a lot of political conversations as it relates to the Consumer Financial Protection Bureau that we'll see more of that, I think, kind of political hot potato going on if you have changes to the elections.
One last question. Where in the USA is Phil Goldfeder today or this week?
So
I get tired following him on LinkedIn or X.
this month is really busy for AFC, actually. We
Mm,
have coming up, we've got our chief risk and chief compliance officer roundtable where we bring in, I think we've got over 50 people that are coming into town. We've got a great program there. And that's fantastic for members. I always love that event because it's
mm-hmm,
the wonkiest of the wonky people coming
mm-hmm,
together, and I have a good time. Phil is running around everywhere. We try to live up to the mantra of AFC is everywhere, which our members have very thankfully bestowed upon us. They've
mm-hmm.
said it to me more than at least 20 times. So I'm very happy that we can continue to be everywhere and really advocating both on the federal side and the state side, very effectively, and doing a lot of events. We've got a very busy events calendar. We try to, work with each different vertical, whether it's, the fintech leads, the CEOs, the CCOs and CROs, and even the GCs. And so we try to make June a very busy month, even though some people travel at times. So it's
Mm-hmm.
it's it's a little tricky there, but always fun.
No, you guys are a great organization. We love working with you and fantastic group, kind of like us. You're small group, very
Right.
scrappy. Yeah,
Yep. Punch
very
above our weight class.
Yeah,
Yeah.
very cohesive, and you're so important to your members. I mean, you are the boots on the ground, man. You're right there in the middle of it, and you're fighting for your members and relaying information like you did to for us today. Thank God, because it's a lot. And I like when you say you're a wonk. I keep thinking about
I,
Willy Wonka and put you in a Willy Wonka outfit or something. But you love,
I don't know if I would look good in that, but I'll
yeah,
I'll take I'll take the candy off of the deal.
yeah, but no, thanks, Ian. Always a pleasure having you on. Maybe next time you can send your AI bot to update us, AI Ian, so you can just continue your work and send your bot to do the interviews. But no, it's great to have you on. Fantastic, and wish you the best this summer. And thanks for all these updates. And hopefully we'll have you on soon, maybe after the midterms, and we'll see what's happening then. But appreciate it, man.
Absolutely. Always happy to come back. Appreciate it.
Thanks, Ian.
Thanks.